me introduce our guests on the show. We have Mayuresh Joshi of Angel Broking, who's joining us, and we also have we have Mitesh Thakkar, our technical expert, joining in to take some of those questions. Deepan Mehta, member of the BSE and NSE, is with us as well. Gentlemen, thanks very much, all of you, for taking the time and being here as always. But I mean, news flow has been coming in thick and fast as far as
Mayuresh, your choice?
So I agree with Deepan on SBI, but largely again I think on the private corporate side, ICICI Bank looks very, very interesting. Yes, I think the pain will not go away in the next 2 quarters. You're probably still going to see elevated stress happening both in terms of provisioning and the drill down of the watch list thereof. And again, the new set of accounts that RBI has proposed, which means that the credit costs will remain elevated. But as the pain starts receding over the next 2 quarters and as retail advances is something that the bank is looking forward for in terms of growth, and which has been historically the case over the last 3-4 quarters, that will lay precedence to the earnings trajectory and the return on assets and return on equity actually improving. So ICICI Bank is something that I'll remain very, very optimistic about.
Fine. Mitesh, which is the best chart? Okay. Mayuresh, you will buy Bhushan?
The assets are no doubt good, Lata, at this point of time, and look at the operating leverage that any company who bids for these assets will get, because the sweating that they can do from these assets will improve their return ratios quite significantly. So yes, I think there is a lot of overhang still on these stocks with the IBC coming through. And as Deepan rightly pointed out, I think what actually comes out as residual value to equity shareholders, specifically minority shareholders, will remain a big overhang and a question mark. So yes, I think stocks like ICICI Bank is still something that I like to probably look at. There are auto ancillary players as well. So I think Minda Industries is something that I'll still continue to prefer on any given decline, considering the kind of growth that the company can actually give and the margin profile of 11% that the management is probably projecting over a period of time.
Okay. Well, we have to take a break. Okay. Fair enough. What about you, Mayuresh? HDFC Life?
You should hold on, Lata. Again, I think if you look at the key parameters, the value of new business at 22%, which is far better than an ICICI and an SBI at 10 and 15% respectively. The new business premium share is at 17%, which is far better at 9%. So all the ratios that you're probably looking at in terms of even the contribution from ULIP is just 35% compared to 50 for ICICI, almost 70 for SBI. So somewhere I think the key parameters have ensured that the value is far higher in terms of the embedded returns that the stock is giving. So the return on operating embedded value is close to around 22%, which is again better. But again, valuations probably on the higher side. So I agree with Deepan. I think if the investor has a long-term view and he can stay invested, I think this is a sunrise sector. You should hold on to HDFC Life. Okay.
Well, we can't give HDFC Life, I guess, to Mitesh, since it has no trading history. But then
Mayuresh, ICICI Pru?
Again, the same logic, Prashant. I think insurance stocks is something that you can hold on. In terms of valuation compared to an HDFC or an SBI, it is still one of the cheapest stocks in terms of embedded value. And again, in terms of the potential for new business premium that ICICI Pru has been able to collect, the bank insurance partners that it has probably got, I think we're going to see significant improvement happening on all these parameters. The solvency ratio also, along with the other players, right there at the top end of the quartile. So yes, again, a long-term view, if the investor does genuinely possess, I think he can definitely hold on to this stock.
Okay, thanks for that. Now, okay, Mayuresh?
I think I'm better off with advice from Mitesh and Ashwini for a short term.
Okay. Mitesh, one good stock or maybe a few good stocks for a year.
I mean, see, whatever amount you have, I think it still makes sense to divide into at least 3 to 4 parts, for some sake of diversification, and then the stock which I would suggest.
Have time for, but that's solid advice that our viewers have got, and we do hope you will keep writing to our to CNBC TV